All right, here we're finishing up a beautiful run. Prices made it to my sweet spot area. Then it gave me a high here, pushed down, came back, lower high, broke through, closed on the other side of EMA. Perfect entry for a lower high short. And 1, 2, 3 of them. Look at that. Beautiful run coming right out of the sweet spot. Hey, don't get no better than that. Let's count it down. 5, 4, 3, 2, 1. Say it with me.
Easy money.
Hey guys, how's it going? JD here. Boy, do I have a good one for you today. Today, I am going to show you how to make money with your mind. Okay, so we've been going over the inner workings, the real deep stuff about trading, not just the technical analysis and, not just indicators, but we've been going real deep into how trading, okay, day trading is a mental game. All right. And so I've been reading this book, very popular book. Many of you may be familiar with it, The Disciplined Trader, by Mark Douglas. And it's very interesting. I'm on this chapter where he's discussing how the mind works. All right. He's only discussing how the mind works. He's not even talking about trading at all at this point. Okay. But man, let me tell you, this part of the book is so serious because for the first time, I understand a phenomenon that I've noticed that I just couldn't explain it. I couldn't explain it at all. And that phenomenon is how trading has to click for you. All right. What I mean by that is you'll hear this story a lot in the trading arena that, hey, I was losing, and one day it clicked. Right. And I've never understood why trading is like that. But now I get it. All right. Now I get it. And so I'm going to break this down to you today to help you understand why trading has to click for you. But once it clicks for you, then you'll be able to make money with your mind. Okay. So let's get into it. So first of all, I find something there's two things that I find to be pretty fascinating. Okay. The first thing that's fascinating to me is that, and I'm going to talk about personal experience here. The first thing that's fascinating to me still is that I traded for 10 years and never grasped the most important part of trading. Okay. So, and then it just clicked, right? So that's fascinating to me that I spent 10 years trading with indicators, trading with trying to do pivot points, going from strategy to strategy to strategy for a whole decade. I find it fascinating that I traded for a whole decade and I actually never saw the market cycle. Okay. So we're going to go deeper into the market cycle for sure in this one, but in 10 years of trading, I find it fascinating that I'm looking at price charts, right? But I never saw the most important piece in 10 years. I find that fascinating. Then I find it fascinating that as soon as somebody was teaching me price action, okay, was telling me exactly what to do, and I'm listening, right? I'm watching, okay? I find it fascinating that it still took a significant amount of time before I had that aha moment. Even though I'm listening to somebody tell me exactly, I'm listening to somebody explain price action to me, but it still took me a minute for it to click. All right. And so I'm going to explain to you why that is. Mark Douglas explains why that is. And historically, I have just told people, listen, you got to practice, right? You got to get your chart hours up. But I was just saying that because that's what I did for it to finally click, but I didn't understand why it happened. Now I'm going to be able to explain to you why it happened from what I learned about how the mind works. But before I get into that, I want to cover this. All right. What's most important in trading, right? If you've been trading any amount of time, what's the most important thing, right? Because there's a lot of information out there. There's a lot of ways you can go with trading, but truly, what's most important? What's number one? What's the number one most important thing in day trading? Okay. The most important thing is the ability to know what's going to happen next. Okay. And now I understand you. There's no way. None of us have a crystal ball. None of us are trading profits, right? You can't know 100% of the time what's going to happen. But your job as a trader, right, is to at least predict which direction the market is going, right? Your job, the number one most important thing is to know which direction the market is going. If you can't tell which direction the market is going, right? No setup is going to help you. No indicator is going to help you. No, nothing is going to help you. You have to have the ability to be able to tell what the market is doing. Okay. I define price action as the ability to read a price chart. All right. But see, the ability to read a price chart, what I'm really saying is you have a pretty good ability to tell me where we are in the market cycle and what's probable to happen next. That's all. Trading is probabilities. So you have to know what's probable to happen next. But the thing about it is when you learn the market cycle, okay, you start to understand how the ocean of market money flows, right? We talked about this in the last video. You have to understand how the market flows. And so it's still fascinating to me that I spent a decade looking at charts and I never stumbled upon the market cycle myself, right? I just didn't. But let me explain why. Mark Douglas helped me out with this. Okay. The mind works by, there's an inner environment, which is, we just gonna say the mind, and then the outer environment, everything else, you know what I'm saying? The TV you're looking at right now is part of the outer environment. Outer environment, everything else is physical in the world, right? Everything in your mind isn't physical, right? So what happens is this with trading and anything that you're actually trying to learn, you first start with a blank slate, right? You first start with a blank slate. So what happens is this, you come on my channel, you know what I'm saying? And I say the word market cycle for the very first time, right? And I show it to you. I draw it. Y'all see me draw it all the time. But let me just say it real quick. It's trend break, retest the new high. Okay. That's the market cycle. Now, when you're first exposed to this information, you don't think nothing about it. Okay. You heard me say it. You saw me draw it, but consciously you really didn't grasp it. Okay. But your mind did. Your mind stored that picture that I was showing you, stored the words I was saying connected with the picture. It stored it in a little ball of energy and put it in your memory somewhere. Okay. So what happens is over time, the more and more let's say you keep watching this channel, right? The more and more I draw it up for you and say those words, you start to stockpile trend up, trend break, retest, right? But there's a few things working against you. First, most people aren't going to believe what I'm saying. That's first and foremost, because you've been losing for so long. There's a whole bunch of people out here that's supposed to be pro traders and gurus, right? So when you come across my channel, first of all, at the initial time I said that, hey, the market cycle is the key. The market cycle is trend up, trend break, retest. The first time I say it, you don't even believe me, right? That's just human nature. You've been out here with all these whack teachers, you know what I'm saying? Whack traders, you know what I'm saying? And, it's hard to believe, right? It's hard to believe that I'm trying to say, hey, listen, if you can see this market cycle, you'll start winning. So first, it's hard to even believe that's true. All right. But if you keep coming back, if you keep watching, if you hit that subscribe button, sooner or later, you'll start to say, all right, maybe he's telling the truth. Maybe he's on to something. Right. And it's not that I'm telling the truth. It's just that it is true. Right. The market moves in a cycle. You know what I'm saying? I prove it every single day. But no, not even the market proves it every single day. Okay, this isn't about whether I'm telling the truth. It is what it is. There's a market cycle. Okay, money flows a certain way in this market cycle, and it's trend up, trend break, retest new high, and it could be coming down too. Trend down, trend break, retest new low. That's the market cycle. Okay, so let's say you get to the point where you actually believe it, right? The crazy part is you still can't see it, right? I can say it. I can draw it on a chart. Stay to the end of this video. We're going to go to some charts. I'm going to draw one for you. I'm going to show it to you again. But on your own, when you go to a chart, you still can't see it, right? And that has been the phenomenon to me. But the reason you can't see it is because your mind hasn't stored enough charts looking for it to make a connection, to make an association when you see it in real time. Okay. So when I tell you to practice, what's happening is that every time you mark up a chart, it's like your mind is taking a screenshot and it's storing it away, right? It's taking a screenshot, storing it away. Every time you practice, every time you get your chart hours up, you're taking a screenshot, you're storing it away. But the phenomenon is you still can't see it. Okay. And then one day you're analyzing the chart. You're looking at the 21 EMA and it clicks. You just see it. You see it trend up, trend break, retest. And you just say, hey, that's the market cycle. And your mind now has connected what you're looking at right now to all that past history, all those charts that you marked up, all those videos of mine that you've watched, all the time you've heard me say trend up, trend break, retest a new high, all the time you've seen me draw it, it all just comes together and it clicks. And all of a sudden you can see the market cycle. Then you go to another chart. And you follow the 21 EMA, you're like trend up, trend break, retest. It's right here too. Then you go to another chart and it's going short. You like, hey, trend down, trend break, retest. It's on this chart too. And then it hits you like a ton of bricks. I've been trading all this time and I couldn't see the market cycle. Like, how have I been? No wonder I've been losing. No wonder I've been losing. Because I've been trading for years and I didn't even understand how to read a price chart. I've been trading for all these years and I had no idea that I could predict what should happen next. I've been trading all these years and there's a high probability that once I get a trend break and a retest, a trend break and a retracement, we're probably gonna retest the lows and go to longer, All this time it's been there, and that's the phenomenon of trading. Okay. The market cycle has been here the whole time. But if you haven't had anybody pull your coattail to it, tell you to start looking for it, tell you to start practicing to see it, you may never see it. It took me a decade. Now, it didn't take me a decade to see it once I was exposed to it. But even after I was exposed to it, I would say it took me about another 6 months before I actually saw it. And I'm referring more to that. No. It took me about 6 months. Now I was able to spot second entries. Took me even longer to spot higher lows and lower highs, but I was able to spot second entries because that's a counting mechanism. So I was able to spot it. But there's a lot of second entries, but they're not all made equally. You know what I'm saying? The best ones happen in a certain part. And the market cycle. So listen, the market cycle is I give away the keys to trade in nearly every video. Okay. There truly is nothing more important than the market cycle. If you can't pick the direction of the market, you're dead in the water. Right. But once you can see the market cycle, then all of a sudden those second entries are jumping off the page. Those higher lows are jumping off the page. That base rally is just jumping off the page at you because you already know where we are in the cycle, right? And then from there, guess what? Once you can see the market cycle, once you can see second entries coming a mile away, once you can see higher lows coming a mile away, now you have the ability to make money with your mind. Okay. You have the ability to make money with your mind because you're playing in a game. You're playing a mind game. Day trading is a mind game. And so, as I have said time and time again, You have to practice, practice, practice. But now you know why. You have to store enough charts in your mind to make the connection for it to click one day. Okay. So listen, I want to truly encourage you. All right. If you're serious about this day trading thing, you have to read charts every day, because I don't know how long it's going to take for it to make it click. That's the thing. I would assume, I'm making an assumption, I would assume that it's probably different for everybody. But I know for a fact it comes down to how many charts you've marked up. You know what I'm saying? It comes down to how many charts you marked up, whether you believe what I'm saying to you right now, okay? Whether you storing that information back, all right? That's what it's gonna come down to. But the more charts you read, the more charts you analyze, the more you follow the 21 EMA to try to see the market cycle, the quicker it will happen. And one day it's just gonna click, all right? Once it clicks, then you'll be able to take price action setups. You'll see them coming a mile away, all right? And you will be able to make any amount of money your account size allows you to make. And you'll be making all that money with your mind. Okay. So I just want to encourage you, people who are in my community, people who grab my course, people who subscribe to this channel, it's going to come down to practice, right? We've talked about this. It's discipline, it's risk management. Man, at the end of the day though, it's got to click. It's got to click. And the only way you're going to be able to see it is if you practice. All right. So before we go to the work study lesson, just as a final example, I just want to explain something to you. Like when it comes to drawing the fib, see, that helps you see the cycle. I'm gonna show you in a second how that helps you see the cycle. But I've drawn so many fibs. Okay. I've looked at so many charts. I don't even need the Fibonacci to tell you that prices have retraced 50%. I can just glance at a chart now. I truly don't need the EMA anymore. I don't need the 21 EMA anymore. I really don't need Fibonacci retracement tool anymore, because I've looked at so many charts. My mind has logged and stored away so many price charts that I can glance at a chart now and make the association that that's about 50%. You know what I'm saying? So say we were coming down and it pulled back. I could just glance at the chart and say, that's about 50%. Start looking. It's probably about time to start looking for short setups. I could just, at a glance, I don't need it 21 EMA. I don't need a fib. I do it just for a visual, confirmation and to teach you guys. But I actually don't even need that stuff no more, because I've logged that many charts in my mind, and my mind easily makes the association. I look, boom. Hey, we about to go short. Second entry should be coming. After the second entry, we're going to get a lower high. If I get a big signal candle, it's go time. Like it's automatic, because I've looked at and read that many charts. Okay. So, hey, if you want to make money with your mind, just keep practicing. All right. And now we know why. You have to store enough charts in your memory, in your mind, that your eyes can start to look at a chart and you make a quick association that this is a downtrend, this is an uptrend, this is a range, right? The more charts your mind had, the more data. It's like storing data in a memory bank in your mind. The more charts that are stored in your mind, the quicker you will make the association that this is an uptrend, this is a downtrend, this is a range, right? This is probably about a 50% retracement. Let's put a fib on it to see. Yep, it is time to take a trade. That's the game. Okay. The most important thing in trading is to be able to tell which direction the market should go next. There's nothing more important than picking the right direction. I mean, can we all agree on that? There's nothing more important than picking the right direction. So you have to learn and be able to see the market cycle. And once you do, you'll be making money with your mind. All right. So let's go over to the work study lesson so I can show you this market cycle again and how I was able to make money with my mind today. Actually $400, which is a pretty decent day. It ain't 4,000, you know what I'm saying? But in binary options, $400, that's a pretty decent day. How I was able to make $400 with my mind. Let's go to the charts. If you want to learn price action trading, you can visit www.jdhyder.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the sudden. Okay, guys, we're back. So we're going to look at the chart from the intro today, and it was the AUDN. All right. So first of all, for those who are new to the channel, if you have never seen the market cycle, this is almost picture perfect market cycle. All right. I'm gonna just see if you can see it. Can you see it? Does anybody see it? If you see it already, hit the like button for me. All right. Hit the like button right now if you already see it. Okay. Now, if you're new to the channel and you don't see it, let me introduce you to the market cycle. And this is how markets move across the board. It doesn't matter which market you're looking at. Okay, it doesn't matter whether it's futures, Forex, stocks. Okay, the market has a cycle. Okay, the market has a flow. The money, because all these bars to me is just flat out money. I see these bars as money. All right, money moves through the market in a certain flow, in a certain pattern, just like the ocean currents move in a certain flow, a certain pattern. Sometimes they're more aggressive, you know, sometimes the waves is a little stronger, right? Sometimes the current is a little stronger than other times, but it's doing the same thing overall. And the market cycle is just like that. It's just like an ocean of money, and it has a flow. So here's the flow. This is a trend. This is a trend down. Oh, let me start over. God, that was ugly. We have a trend down here. This is your trend break. This is your retest to new lows. Here was a low. Here are new lows. That right there, people, is the absolute perfect market cycle. I mean, it just doesn't get, I mean, that's it. That's the market cycle. Here's the other thing I've been talking about when I talk about market cycles. So it goes both ways though. Let me show you a small market cycle. Trend up, trend break, retest to new highs. This was first high. This is the new high. This was the high that was retested right here. And this is the new high right here. I mean, the market cycle is everywhere. It's happening everywhere. It's the way prices move. So like I said before, if this is your first time seeing this, you may be seeing this, but you ain't even seeing this unless you just take me at my word. Trend down, trend break, retest the new low. It happens all the time. But once you can see it, right? Once you can stare, glance at a price chart and see this part. So you see that, all right, hey, we got a trend down. And then you can say, hey, this boy done broke this trend. You know, prices is higher here. You know, it's probably going to retrace about 50%, 618, which is what we call a sweet spot. And then the next leg is going to start. So as a price action trader, when I come and see a chart and it's only at this point, you know, prices is right in here. Let me clear this out. You know, prices is right in here, and I can already see we've had a trend down and a trend break. I already know to wait and look for a price action entry to go short. Okay. It's like I have an advantage in the marketplace simply because I understand the market cycle. Okay. And I try to, I mean, I don't know if there's anything more important than understanding the market cycle. If you don't understand how money is flowing, you know, if you don't understand how it's flowing, if you don't understand, you know, how to tell the direction, what's really probable to happen next, how can you really trade? You know, that's why people are at the mercy of indicators, because when you put a whole bunch of indicators on your chart, you know what I'm saying? You're not even reading the price action anymore. You're looking at the indicator. That's it. You're looking at the indicator. And a lot of times they down here, right? You're looking down here to say, okay, is this thing above a line? Is it at a 90%? Is it above whatever? You know, you're not even looking at the chart. That's why people who use a whole bunch of indicators, you're at the mercy of the indicators. But when you use one indicator, the 21 EMA, and the sole purpose of it is for us to see the market cycle, trend down, trend break, retest the new low. That's the whole purpose of the 21 EMA. It allows us to see the market cycle at a glance. And so once you grasp this, then it's just game time, right? So in my case, I use Fibonacci. I've combined everything I just said in this video with Fibonacci retracements. Here's why. The Fibonacci retracement it goes hand in hand with the natural flow of price action. So with Fibonacci, when you have a trend, right? And you know you have a trend if prices are staying under the 21 EMA. So we clearly have a trend down. There's no doubt about this. The trend started right here at 304, right? You didn't get a trend break until 408. We got an hour. We got a whole complete hour under 21 EMA. That's a trend down. No doubt about it. Okay. So we know we have a trend down. So once we get a significant break, which you could say this is a break, but definitely by time once this leg here, that's a break right there for sure. Once you got a confirmed break, now you can draw a fib. So I would take a fib, I would start here. I would pull it to the bottom. Boom there. And then it would tell me this would be 50% right here. This right here would be 618. That gives me my zone, which is what you're looking at right here. Okay. Now all I do have to do is wait, because I understand that we're going to get another leg. We're going to get a retest leg. And it's probably more than likely going to be the same distance or further than as this leg. And that's where the second part to the market cycle comes in, which is the rule of two. The market moves in twos. So again, as a price action trader, I've seen a trend break. I am waiting for the retest to start. And I know ahead of time, man, I am teaching today. I know ahead of time that it should start to turn in the 50% 618 area. And that's why, and it does in this case. This is why this is perfect price action, because you can see the market cycle beautifully. And not only that, it turned exactly where we expected, right here at the 618 50% zone, which is the best entry zone in trading. Okay. So after you get that, then it's just like, I'm just picking up money out the ocean. Okay. I'm just picking up money out the ocean. I'm giving myself money. All right. So once this thing starts coming back in, I'm going right here. Okay. And if I miss that one, hey man, I'm still going right here because it breaks back in. Either one of those wins. 1, 2, 3, that's a win. 1, 2, let's see. 1, 2, 3, that's a win. Either way you slice that one, you gotta win. Okay. Now, this actually here's a high, push down, lower high. That's pretty decent. It's right off the it's right off the golden ratio. Close on his bottom, kind of fall hammer. Now, it didn't close lower than the bar to the left, which is a sign. And if you take that one, you take a L. Oops. Go back one. You take this one, you take a L. Hey, you don't win them all, because that's 1, 2, 3. Comes back and gets you. That's just unfortunate. But hey, it didn't break lower to the one to the left, so that was kind of the clue. It was kind of a weak signal candle, but I liked it. I admit it's right off of the golden ratio. But if you stick to it and say, all right, well, that one didn't work, but we push back up again. Here's another strong push off. Another strong push off of the golden ratio. And again, you have to think about what we're expecting at this point. We're expecting another leg of this distance right here. So I'll go right there. Oh, wait a minute, Jay. I'll go right here And what do we get? 1, 2, 3. That's a win. Then you get another high, push down, lower high. Now this one is nice. It's basically open on this top, didn't even tick higher, closed on this bottom, closed through the EMA. It's a strong candle. That's a perfect signal candle right there. I'm going again right here. Boom. Go right there. You up to the races. 1, 2, 3. This is the one you saw in the intro today. Okay. Then it happens again. You got a high, push down, lower high. This one is, these are far away from EMA, but at this point, what are we expecting? What are we expecting, people? We're expecting another leg of this distance. And now at this point, we're out of the sweet spot. We trending. Hey, retest is on. So you know what? If you want to be aggressive here, I ain't mad at you. You know what I'm saying? You just paying yourself money. You just picking up money out the ocean. Let's get it. You can go here. 1, 2, 3. When this candle breaks lower, you can go here. 1, 2, 3. When this candle starts to break low, you got to go early on this one though. But actually it'd be better. Let me see. When you went here, 1, 2, 3, you would have won on this. Then when this one drops down, I don't go here because entering here is too far away from the EMA. But I wait for the pullback and then I go here. 1, 2, 3. Then you get another high, lower high. This one breaks lower, open, then go higher, break lower. You can go here. 1, 2, 3. Now down here, you're way too far away from EMA, so you gotta wait. You gotta wait, but then you kind of push up. First entry, push up. You can go here. Second entry short. 1, 2, 3. Then again, down here, you're too far away from EMA. You gotta wait. It pushes up, comes down. First entry, pushes up, breaks back down. Second entry short. This one is pretty close to being off the EMA. You go there. 1, 2, 3. And then let me see. You went here. 1, 2. Oh, actually, you went on this. So then when this one pushed down, you may go here. It's too far from the EMA, and you finally get caught. No, wait a minute. No, you didn't. You go here. 1, 2. Yeah, you did. You get caught on that one. Hold on. Let me go back one. You was testing it at this point, though. You was testing it, but I mean, you got so much money. You make, you ain't even tripping about giving one back. But then you see you make the pattern high, pushed up, lower high, another strong candle, closed on this low. You go right here. Bam. 1, 2, 3. All right. Then down here, you're too far away from the EMA. Pushes up, comes right off the EMA. Unfortunately, that's the first entry. Some of these are kind of first entries too, but you riding a wave. I'll tell you what. I probably would have missed this one because I would have expected, like, when it pushed up with this big green candle, I would have started getting scared. So I wouldn't have taken this one. I wouldn't have taken it, So that's really the run. I mean, there's some more here that I could argue for, but why? Because let's count this up. I mean, why even try? That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. That's 11 out of 13 because you have the ability to know what the market should do next. You can draw a fib right here as confirmation that I think we're going to start falling once we get to this zone. And once it does, you ride that wave down and you make as much money as you want to. You give yourself as much money as you want to with your mind. This is mind money. Okay. This ain't nothing physical other than pressing a button on a mouse, right? We're not right. This ain't nothing physical. This is pressing a button with a mouse. All right. You're making money. This is how you make money with your mind. Okay. It's gonna stem on your ability to perceive opportunity and execute a trade. But when you can perceive opportunity and execute a trade, you can then make money with your mind. All right. So that is going to wrap it up for this video, but I just want to leave you with one last example and thought about why you have to practice to be able to do this, to be able to see the market cycle. I saw a clip on Instagram the other day of Michael Jordan talking to Lisa Leslie, and Michael was explaining to Lisa that he's taken so many fadeaway jump shots at this particular spot on the basketball court that he doesn't even need to see the rim anymore. Okay. What he was saying is that he had practiced to the point that his muscle memory and his mind memory had connected in such a way that from this particular spot on the basketball court, he could close his eyes and take the shot. It doesn't matter because he already stored so many jumpers from that spot. He already stored the rim from that spot in his mind, right? To the point where he doesn't even need to see the rim when he shoots. That's the same thing I'm trying to say with trading. When you've marked up so many price charts and stored this pattern so many times in your mind, whenever you go to a new chart, you will get to the point one day that you just see it. Okay, it's going to click. I can't tell you when it's going to click. All I can tell you is that with practice, it will click, but you have to store enough price charts away in your memory. And like Jordan, you'll better take fadeaways with your eyes closed and pick up all this money that's available when you trade the retest of a market cycle. All right, so that's gonna wrap it up for me. I hope you guys enjoyed this one. Please like, share, and subscribe, and I'm gonna catch you next time. My name is JD, and as always, I wish you increase on the sudden. Do you want to find out how you can give yourself money? Watch this video right here.